All right. Hopefully this is working. I haven't done this before on Zoom, streaming directly live into Facebook, but I am Jerrad Havins, co-founder and CEO of Credit Life, and also a financial freedom strategist. So, really just looking to do more content. I just realized, on Mondays, I really want to make a push and put out more information, some education for people. And today, what I'm going to go over, because I'm working with a ton of business owners, is just really laying out the groundwork. If you're someone that either owns a business now, you're looking to figure out how do I actually grow and scale through the use of capital? How do I do this properly? How do I even get access to better capital? How does this work? Or, you're someone, I'm looking to start a business. I want to take control of my financial future. This is definitely going to be this is for you today. All right. So let's have fun. Hopefully everyone can hear me. Hopefully everyone can see me. I actually created a PowerPoint just for this, so would love to go ahead and share that with you guys right now. And let's get started. So I'll share my screen. And let's begin. All right. So, like I said before, I've been in the industry now. I own Credit Life. We've had this business for a little over 10 years. I've been in the industry between mortgage and credit related services now about 20 years. And I work with a ton of business owners, both on a personal credit and financial wellness side, as well as a business coaching side. And so, one thing that I've noticed, there's a lot of misinformation out there. I mean, when it comes to this world of internet, social media, TikTok, all these different things, there's a lot of information out there that can really lead someone down the wrong path. So I'm just going to give it to you straight. I'm going to tell you exactly what you need to do, and we're going to focus on the foundational steps first and what it actually means for your business. So what I labeled this here today is business credit and funding maximizer. So what we're going to do is we're going to break this down into 7 steps. So we got first, I'm a big person on setting goals. So we're going to start with the end in mind. Let's actually analyze, what am I looking to accomplish? Am I a new business owner and I'm looking to launch a business? What's the amount of capital I'm going to need? Do I need some operating cash? What do I need to get this off the ground? And every business is different, as you know. Some businesses have very low capital investment initially, some have more. And so we need to make sure we lay that out in advance. So starting with the end in mind. Then we're going to go into business foundation. What is it that the lender is going to look for that are essentially just requirements for you to even establish business credit and even get access to funding? From there, we're going to talk about optimizing reporting, credit reporting, and that will be more specific to business credit reporting, not necessarily personal. Personal plays a large role in business credit, especially initially, but we're really going to talk about business credit and optimizing reporting. Then from there, we're going to talk about how do we actually build business credit? How do we access financing? Also, how do I increase my exposure? That's actually really important, especially for a growing business. That can really lead to obviously higher conversion, more awareness, and that type of growth pattern directly correlates to your ability to access more capital. Because if you think about it, for a lender, when they're evaluating your growth trend, showing that you're growing, revenue's increasing, obviously that's a good thing. That's lower perceived risk. And so this is actually very important. And then finally, an exit plan. I know a lot of people, when they're either starting their business or they're in their business is their investment. And so I really think it's important for you to understand that and also strategize your exit plan. You don't need to necessarily be absolutely fanatical about it, but I would say, once again, with starting with the end in mind, we should really hone in on what does my exit look like? Because a lot of times business owners don't even think about that. They're just in their business. It's their way of living. And they don't really think about, when it's time to exit, what does that even look like for me? And so I think that's really important. So let's go over this really quick, starting with the end in mind. We kind of talked about it real quick in the beginning there, but it's all about goal setting. Really having a clear understanding of what it is that I'm looking to accomplish. How is my business going to operate? How am I going to acquire more leads? How am I going to convert these opportunities into clients? What does that process look like? Is there anything else? Do I need a team? Can I do this by myself at first? And with that, kind of doing a reverse engineering model of saying, okay, here's exactly what I need to do. Now let's start setting goals around that. How are you going to get there? Do you need to leverage your network? Do you need to acquire certain type of technology to help you with that? Do you need to acquire equipment? We really need to analyze, what's necessary. If you're an operating business, you're going to have a little bit more awareness around this when it comes to, what, I need another piece of equipment because I'm growing and I'm really missing out opportunities and revenue opportunities by not having this piece of equipment. So that's going to kind of help you there. And I did talk about this briefly, but really leverage your network. There's a lot of power in that. Obviously, you can leverage someone like myself in a business credit, finance, and coaching capacity. But outside of that, think bigger. When it comes to your network, who do you know that can help you? Who do you know that has some experience in business? Really kind of gleaning in on that and seeing, what have they done? Because if you can learn certain mistakes, obviously every business is different, but when it comes to growing a business, there's going to be a lot of similarities. And so I really think that if you can lean on others who have experience like that, it can really allow you to kind of get a head start and think about, certain things that maybe you didn't think about in advance that they bring to light, where you're saying, hey, you know what? I didn't even think about that. I need to be prepared for that. So it really helps when it comes to leveraging your network to ultimately put yourself in a position to be successful. Next is going to be business foundation. So number one, you have to have a business entity. So that's going to be number one, whether you file an S Corp, C Corp, LLC. I'd say obviously LLC is the most popular, but ultimately you need to officially file a business entity with your state and making sure that you do that properly. Here's a piece that gets overlooked quite often, and I'll kind of explain this. It's not necessarily required. This is brought up a lot. There's a lot of business gurus out there that bring this up. It's kind of cookie cutter, but I'll explain what I mean by this. So let's say you're a business and you're looking to acquire capital. Well, let's say you're a home-based business. And, for you, it'd be easier if I could get access to some business credit cards that don't report under my personal credit, they report under my business. And I can leverage that business credit card for certain purchases or maybe some marketing. You don't necessarily need a dedicated business line to get approved for that. However, let's say you're a business and you're either just launching, maybe it's more of a brick and mortar concept, or it's just going to be a larger, higher revenue type opportunity in general. Lenders will look at this. They want to basically think of it as like lender compliance. We want to make sure we're ultimately lowering the overall perceived risk to that lender. Well, this is a very easy way to do that, where you basically obtain a dedicated business line, but that is not a cell phone. So you may have heard of the 411 directory. So that's essentially, I just say it's old school. It's almost like the old school white pages. Really the 411 directory is something that lenders can ping and ultimately see if you show up in there as a business. And that helps legitimize your business. So if you are looking for, let's say, a larger term loan, or maybe a commercial loan, or a large line of credit, anything like that that would be in a larger scale, these type of steps are actually really critical. You're going to want to have a strong foundation. Once again, obviously, you're going to need a federal EIN, any appropriate licenses for your business. Business banking is really important. I'm going to kind of expand on this. One, you have to have a business checking tied to your business name and your federal EIN number. But more importantly, think about who you want to align yourself with when it comes to a business banker. A lot of times people will immediately go to the bank they've always been with. Wells Fargo is a big one, and I would say larger institutions are not bad to work with, but just keep in mind that they're not necessarily tailored towards small business. They're so large that they're ultimately going to be a little bit more rigid in their underwriting for certain products, especially in the business world. And so ultimately, a lot of times I recommend to my clients, like, hey, let's look at some local credit unions, smaller banks. They're ultimately going to really kind of earn your business. They're going to be more available. They might be able to do more of a manual underwriting, when it comes to an application in-house. They might be able to look at compensating factors. I mean, there's so many different ways that you can leverage more of a local relationship with your business bank, especially once again around a credit union or a smaller institution. And then also personal credit. And I want to kind of really expand on this for everyone. I'm sure if you've done any research on this, one of the intrigues around business credit is the fact, hey, I just want to get business credit. I want to grow it. I want to completely separate my personal. Why do they even need to look at my personal credit? Well, here's the deal. It takes a while to ultimately be in a position for your entity to solely be approved for a loan or a card completely under your business. There are some like net 30 vendor accounts that will do that. But most people are looking for business credit cards, line of credit, term loans. They're looking for real capital. Okay. The reality is the way that lenders operate is they are going to pull personal credit. Typically, it's going to be a single credit bureau pull. A lot of times it could be Experian. That's very popular in the business world. And really what they're looking for, obviously score is important, just like any other loan out there, but they're really looking for within the credit profile a few things. One, are there excessive recent inquiries? That's a big one. If you have more than 3 in the past 6 months, that's going to automatically flag you as a higher risk on that application because it appears if you're applying and extending a lot of credit quickly, so that can be a red flag. Also, are there any like recent charged off accounts with higher balances? That would be a red flag. Recent bankruptcy filing. They just want to make sure that even though they're lending to your entity, to your business, they want to make sure the owner is sound, right? Because they ultimately want to make sure that they are going to collect on that money, even though it's going to be the business responsibility in repayment in most cases, unless you're doing like a personal loan for business purposes. But in most cases, a business, but ultimately you're responsible for that as well through a personal guarantee as a business owner. So kind of keep that in mind. Now, I would say a benchmark to kind of think about, and this actually is really slick. I do this with clients all the time. If you just go to Experian.com and enroll into their free online credit monitoring service, it includes not only a detailed credit report specific to Experian, but it also includes FICO 8 scores. And so that's important because a lot of business products that when they pull personal credit, they're actually using FICO 8. It's very, very common, especially for business credit cards. So seeing where you're at with a FICO 8 score is really important. And keep in mind, a lot of people don't know this. There's multiple variations of your FICO score. Your mortgage credit score for FICO is different. Your FICO score for auto is different. Your FICO for credit cards are different. There are different variations that evaluate risk differently, specific to what you're applying for. Well, in this purpose, we're looking for business credit. And so FICO 8, it's a free resource to give you an idea of where you're at. I would say a minimum benchmark that you should shoot for is a 680 plus FICO 8 score. The higher, the better. Now, are there certain loans that they'll do below 680? Yes, but ultimately you're going to pay for that. Higher interest, the terms might be daily, weekly payments. I'm not a big fan of that. Definitely like to stay away from that, but just understand there are options, but ideally a 680 plus is going to put you more into a conventional or type of traditional type business loan. So keep that in mind. Now, optimizing reporting, what does that mean? Well, let's think about it. So just like personal credit, we have the personal credit bureaus, right? We got Experian, Equifax, TransUnion, the 3 big dogs. They're separate, they're competitors, they make money on our data, they're for profit, they make a ton of money. Well, in the world of business, we got that going on too. All right. So we got Experian Business Division, Equifax Business, Dun & Bradstreet. So those are going to be the biggest 3. Dun & Bradstreet is going to be the biggest, then Experian, then Equifax when it comes to business credit reporting, the data. And then I bring up Paydex because Paydex is a score that's directly correlated with Dun & Bradstreet. And so one thing I'd say to write down if you're watching this either live or later on as a recording, just know that when it comes to Dun & Bradstreet, in order to generate a Paydex score, you need to have at least 3 accounts reporting under your business that actually report to Dun & Bradstreet. That's important. They're actually actively reporting on a monthly basis. And they all need to report at least for 3 months consecutively in order for you to begin to create and increase your Paydex score. If you don't have that, you will have no score. Experian Business, there's an Experian score that is different, but in most cases, Dun & Bradstreet is very common. It's a very common bureau, and Paydex score is probably the most well-known out there. So I just want to make sure everyone's aware of that. It's not, hey, I got one account, I'm generating a score. There's more to it, and that's why it's important that we really build, a well-rounded business credit profile, just like we would for personal credit. It's very similar. The way we manage these debts are very different. But when it comes to the reporting side of things, it's very similar. FICO does play a role, obviously, in this process, not only with personal credit pull for the FICO 8 score, but FICO, Small Business Administration, also has different scoring for business purposes specifically. So one thing you may have caught on to there that I talked about was, the 3 accounts with Dun & Bradstreet, and if they report, That's extremely critical. So anytime that you're looking at a business credit product, I would always ask, do you report, and who do you report to? Is it Experian business? Do they report to Experian and maybe Dun& Bradstreet? Sometimes they report to more than one. You're going to want to know that and catalog that for yourself. Take note of that, because if you're motivated to really tackle this and build a very strong business foundation in order to maximize financing and get access to better terms, you're going to want to make sure you build out that well-rounded business credit profile between all three of those bureaus. So keep that in mind. It's super, super important. And I would recommend, and I have a lot of solutions for this. So if you have any questions, just comment or message me, dependent on where this is at and where you're seeing it. I can definitely, send you over those resources, but there are ways for you to actively monitor your business credit, and there's ones out there that aren't very expensive that offer great service. I definitely would not recommend doing the paid services at Dun& Bradstreet. They're expensive and quite honestly not worth it. There's just better options out there. And it's important to have that awareness, that ongoing awareness of what's actually reporting under my business entity. And if you notice that you opened up an account and let's say roughly 2 months later, you don't see it reporting yet, one, you want to verify that they have your information, it's accurate. It's just because a lot of times people don't know this, but a lot of times if there was a clerical error or maybe your business address changed at one point, it's not uncommon in the world of business credit bureaus that if they have information that reports over, and even if the company name is the same, but the address is different, they actually may open up a whole new record for your business under that separate address. And now we have multiple files that are deemed as separate that are actually for the same business. So in that case, we'd actually work to bring those files together, combine those files through a request with the business credit bureaus. But that's why having that awareness, ongoing awareness, is actually really important. It's not necessarily going to take a ton of time, but you just really want to make sure you have that awareness. Now let's talk about building business credit. How do we do it? So we got net 30 vendors. The way I would term this, I am not, I'm very different than most people out there in this world. I am not the type to say, hey, we got to open up a bunch of net 30 vendors. These are accounts that you open up with, companies directly. It's almost like a line of credit directly with that company. It could be like a Sherwin-Williams or Home Depot and companies like that. A lot of other business credit coaches out there, and I'm not in any way dogging them. They have a process that works for them. I'm just a little bit different. A lot of times they're going to push this immediately. They're like, hey, we just got to get 3 accounts going. It costs this much. You got to spend this much every single month, and we're just looking to build business credit scores. Well, here's the thing. Opening up accounts that you may not actually necessarily need or would even benefit your business is an absolute waste of time and money. So typically what I do here with my clients is let's identify, are there organizations or companies that you would actually work with your business? Are you making regular purchases? And if so, do those companies offer a vendor line of credit? And if so, let's look into that and apply for it. There's a benefit there, but it does not benefit us to go and open up these wonky little whatever net 30 accounts just to spend money getting products we don't even need just to build business credit. There's just better ways to go about this. Obviously, there's building and industrial vendor accounts. I bring this up because I work with a lot of people within the construction space. And, many times it's very common they're either cash heavy, leveraging cash, or even personal credit a lot in their business. So this is a great way to create that separation, safeguard your cash, leverage credit, do it the right way under the business credit. And building industrial, there's going to be a lot of options. There's even gas cards. There's all sorts of stuff. Fleet, if you're in trucking, a lot of different things. But here's where I really hone in a lot with my clients is business credit cards. So you may remember earlier I brought up, 680 plus FICO 8 score. Business credit cards, if we have that as a benchmark, if we're at 680 or higher, business credit cards to me are one of the best things to leverage, not only to get access to capital that we can strategically use for delayed spend to allow you the ability to grow and scale, but also, they report there's 0% interest offers all the time, anywhere between 12 and 18 months. It's just universal. It's easier to operate something that's universal that you can use that would actually directly benefit your business versus once again trying to get net 30 accounts that don't even help you, right? They're not even going to help your business directly. Because when it comes to business credit, yes, we want to do this strategically to get you access to capital, but we also want to think about your business operations and what you're doing. And if I can understand like your sales process and things like that, and how, how long does it take to get paid, all the different things that are involved in business, that's when we can begin to kind of pick and choose certain lending instruments that will, one, benefit your business, but also put you in a position to succeed versus spending money that we didn't need to. And then on top of that, maybe because we had issues, now we're getting these horrible loans out there with like daily payments. And if that's an accounting nightmare and very difficult for people that don't get daily recurring payments for their business, now all of a sudden they're just completely beholden to this payment, stressed out, going late, and it's a nightmare. So we need to stay away from that. And in order to do that, we have to build this up properly. There's business auto leasing. I help a ton of clients with this. Business auto financing and leasing, that could be a phenomenal way for you, not only dependent on the weight of the vehicle to have a great tax incentive, but it's also a great way to then create separation from your personal credit, especially if you're thinking about debt to income ratios in the future with your personal credit, maybe for a mortgage or something like that, while still having access, to a vehicle under your business entity. So it's really, really slick. Let's talk about funding now. So beyond these credit accounts. So unsecured financing line of credit. This is probably the most popular request that I have when working with business owners. Like, man, if I could just get a line of credit, that'd be so much easier. Something that's revolving, something that I can pull from when I need to. Maybe it's for payroll or purchases that I know I'll pay back in a short period of time. Business line of credit can be an absolute ally when it comes to your business and much easier to manage. So once again, would highly recommend that we're at a 680 plus FICO. Now, if you are sub 680 and you are an established business generating consistent revenue, you've been established typically anywhere between 12 to 24 months or longer, you have consistent revenue, $10,000 or more per month. And with that, we're showing growth, a trend of growth, while also maintaining expenses that don't exceed our deposits, okay? If we can actually showcase strength in that entity, that will offset the perceived risk of your personal credit. So that's another thing that we want to look at. Is there anything there, any compensating factors that showcase my strengths with my business to still get access to a line of credit? That's definitely something we'd be looking at. Business term loan. This is great. Now, keep in mind with a business term loan, this is going to be more like an installment loan, right? It's fixed. So, hey, I'm $100,000, 3-year term, monthly payments. That's how that works. Interest rate of, 14%, whatever it is. So anything like that would be perfect for someone that maybe needs to make a large purchase. They want to have a consistent payment that they can account for, and the terms are extended out beyond 12 months. So that's where a business term loan would be perfect for a company like that. Credit unions offer some great options, especially to small business. I would highly recommend looking into that, as well as, once again, top tier business credit cards. And what I mean by that top tier, I mean like Amex. Amex is an absolute phenomenal credit partner that I'd be looking into. I do this with my clients all the time. They have multiple business credit card options. They allow you to have more than one, and they have a phenomenal line of credit option. And if you showcase great history, you're showcasing spend with on-time payments. A lot of times you can get approved up to $50,000 in a line of credit just by doing the management of those accounts and spending a certain amount. I mean, it's pretty amazing. So that to me is what I would consider like a top tier business credit card. Ultimately, what that means to me is that it can lead to more, and especially directly with that organization that you're working with. They want to earn more of your business. And I feel like Amex has really put themselves in a great position to do something like that. Now, increasing exposure, okay? This is really simple. You should have a website. If you don't have a website, what is going on? So website's huge, right? Not only is it huge for like, obviously awareness, certain types of loans, a lender will look at that to see if you have any brand awareness, any online presence. It's really important. You definitely want it to be company specific URL. And I would even caveat off of that, If you're operating with like a personal Gmail account, you should stop that right now. I would highly recommend you need to purchase a domain for your business. You need to launch a website and you need to operate out of an email that is directly correlated to your business website. Like mine is Jerrad@creditlife.com. That is who I am. That's my company. That everyone should be operating that way, regardless of the size of your business, regardless what you do. Like I'll pick on real estate agents right now. I know so many, I work with thousands of real estate agents and I get hit up all the time and it's their personal emails and I find out they operate with their personal Gmail for business. That's crazy. I mean, imagine being a consumer on the other end. If they were to receive marketing from you versus someone that has a branded email with a branded site, everything's cohesive and connects together. Naturally, that person's going to have a perceived value, a higher perceived value of that other person. So just think about it. You're really looking to position your business for growth. And this is an easy thing that you can do, very inexpensive. That'll just naturally increase your overall perceived value. With that, in order to even have search engine optimization or pay-per-click or things like that, you need to have that website. You need to have, content on that site. You really need to showcase yourself. CRM, automation, and marketing. I'm going to talk about this because I do a lot of this with my clients, do it for Credit Life. I would say in the world that we're living in right now, when it comes to automations, AI technology, here's how I look at it. If I can strategically leverage automations and AI technology to ultimately get me in front of someone to have a real one-on-one conversation, that is perfect. Because think about it. We all only have so much capacity in our day. We can only do so much. And so if you really think about, how am I housing my data? Where are my people coming from? How am I tracking that? How are my conversions? How is my response rate? How are the prospects' responses to me? Do I need to tweak my messaging? All of this ultimately, when you really, hyper focus on this, is going to make you more money. You're going to be more successful and ultimately help more people. If you're in a business of service, especially, you need to be doing this. And so I know a lot of times people might be old school. They're in the Excel spreadsheets, or I do everything on my cell phone. Look, that's fine. A lot of these companies have apps for your cell phone. But I'm telling you right now, you really need to analyze yourself and your business and say, hey, what else can I be doing to put myself in a position to grow and scale and ultimately, do better financially? That's why we're in this business, right? You want to do better financially. You want financial freedom. You want opportunity and you're looking to provide for your family. You want more in life. Well, guess what? This is part of it. This is going to be part of it. And if you're just completely sidestepping that or getting away from that, well, then ultimately you need to look at this. Okay. You just got to suck it up and do it. Social media strategy. This is a big one. Social media not only gets you more online exposure, similar to a website, there are certain cases, anything that we can do to create more exposure for your business and more awareness is going to be good for you. And we all know we're on Facebook right now. Everyone's on Facebook, everyone's on TikTok, everyone's on YouTube. I mean, so what I would recommend here is hone in. Don't feel like you got to do everything right away. Oh, I got to get on all the platforms. I'm going to go crazy now, and I want to do it all. No, just hone in on the one that you understand. Maybe you've been on Facebook longer and you understand Facebook. Okay, well then start there. Do more on Facebook. Get that company page going. Do more content. Be more consistent, daily. And just from there, let it grow. And as you get better at it, then you can add more pieces in. So just kind of start small, start consistent, but just start. Events are a great thing too to increase exposure for many different types of businesses. Highly recommend looking into that. Networking events, whether you attend or if you're at a point where you want to host one. I mean, these are great ways for you to get more exposure. And then lastly, let's talk about the exit plan. The one thing that a lot of people don't talk about or think about. So ultimately, what is it worth? What are you building and was it going to be worth? And I'm sure right now, if you're watching this and you own a business, you probably have no idea. And so you really just got to take some time. I'm not saying to stop everything that you're doing and go, wait a minute, I need to figure this out today. But really analyze and say, okay, what am I building towards? And what am I building and how can I increase the overall value of my business? Because if you're in a business that you can ultimately potentially sell in the future, You want to make sure you're doing everything possible to align your entity in a way to not only be sold, but maximize its value. So I think that's so important to think about. One thing that really hit me in the real estate industry is a lot of times, a lot of agents that have been in the business for a long time, they have a book of business and returning clients and all that. It's not uncommon for a lot of them when they're done with the industry, they kind of just step away. But there's value in that. There's value in that list. There's value in what you've built. And so with that, I know this is becoming more popular now, but really look at that and say, hey, when I do decide to exit real estate, what is this worth and who can I approach? Because I'm telling you right now, anyone that's hungry and they want access to that list or they want the opportunity to help cultivate your past clients, that's valuable. So kind of think about that. And your exit strategy, understanding of like, when am I looking to retire? What does this look like? Am I looking to grow something in 10 years and sell it? Am I looking to do this until I'm, ready to retire? I mean, just kind of think about that. What does that exit strategy look like? And with that, I'll add one more piece. Um, think about, and this is hard. I struggle with this every day myself, is when you are, own a business and you have a team, you're thinking, man, you're going to take on a lot yourself. Okay. But one part of your exit strategy should be, how do you get your business to operate without you? And if you can do that, you're going to be in a great position in the future, whether it be treating your business as an ongoing opportunity to generate consistent revenue without your direct involvement or less involvement. And really that comes to processes. The CRM is going to have a big part of that, your team, but really start thinking about that. Is there anything that I can do a part of my exit strategy to have this run on its own? And it doesn't mean my day-to-day involvement. That could be part of your exit strategy. So ultimately, you need to take action. All right. Hopefully, I've educated you. You've learned some things, and it just motivates you to take some action. For me lately, I look at every day as I'm looking to be as productive as I possibly can in that day when it comes to my personal fitness and health, when it comes to my business, when it comes to my clients, when it comes to my family. I mean, you'll be surprised how much you can accomplish in a day and how that compounds on itself. And it all starts with taking action. No more excuses, like really think about like and when you really start and you start to feel those wins on a day-to-day basis, you're going to be absolutely blown away by how motivated you are the next day to keep going. So that's why taking action is so important. I'm not here to sell you anything right now. I'm not going to pitch anything. You need to take action in general. And if you do that, I'm telling you right now, you'll be better for it. And every single day, you'll just get better and better. And so hopefully you enjoyed this. I know I did. That was really nice. Feel free to comment. I'd love feedback. If there's any content you want me to talk about, I'm Jerrad Havins here, financial freedom strategist specializing in personal credit, debt reduction strategies, debt relief, credit building to get access. I mean, so much stuff on the business side, business credit coaching, business credit itself, and financing. I have a full team. Would love to hear from you. Give me some feedback. If you want to talk, that's great. Hit me up, comment, chat, whatever it is. And otherwise, have a great day, and thanks for your time.